What a great way to start the year with the PSEi rallying 2.3% to start the year off. Let's look at some key levels and see how far this rally could go. My name is Dan Slim and welcome to another episode of Monday Market Outlook. Happy New Year to everyone. The PSEi grinded its way up to 6,629, breaking through the 6,500 level which we last held in August of 2023. Now look at that breakout. So the path is now cleared all the way to 6,700 with a possible breach of the 6,800 level. Now, a lot of analysts are bullish on the markets to start of the year. Now, looking back, we did get a Santa Claus rally, but a very subdued one with only a 0.46 gain during this time frame. Now, remember last year, we were also tracking what's called the January trifecta. This is a combination of the Santa rally, the first 5 days of January, and the January barometer. So far, in the last 25 years, we've had 16 trifectas, 11 of them resulting into a positive year-end. However, we do have to note that the recent 3 misses were all within the 10 years, with 2023 also being a January trifecta, but still ended on a negative. Now, for the US, however, we unfortunately did not get a Santa rally, and usually January really sets the tone for the whole year. That's why if we look at the trifecta numbers, right, 90% of the time, if we do get a positive January, we also get a positive year. But this time, we are 0.9 on the Santa Claus rally, and we are trending negative also for the first 5 days of January. Now, looking back at 2023, the S&P 500 did very well, gaining 24%, while the tech-heavy Nasdaq had a spectacular year with a 53% gain, of course, led by the Magnificent Seven stocks. Now, among our Asian neighbors, though, the PSEi was quite a disappointment, retreating negative 1.8% as compared to Taiwan, Japan, India, South Korea, and even Vietnam. Now, we've asked this question before. Why is the Philippines unattractive to investors despite our great economic numbers? Right? Now, in a nutshell, the answer here would probably be competition. Competition among our Asian neighbors. I guess there's just better alternatives for investment in Southeast Asia. Now, take a look at Vietnam, for instance. Right? Last December, they got an upgrade to a BB+ rating. Now, if GDP continues to grow for Vietnam and foreign direct investments continue to flow, Vietnam could become investment grade by the end of the year. Also, Vietnam is pushing hard to be upgraded from a frontier rating to an emerging markets rating. And how are they going to do this? By relaxing stock market settlement procedures for foreign investors. Now, what's going to happen here is that foreign investors will most likely position themselves ahead of both of these potential upgrades, and as they become overweight Vietnam, this is going to siphon funds away from our local markets. Now, so while we may have good economic numbers and attractive growth prospects, the Philippines will need to have an attractive narrative for 2024 so that we can turn investors' heads our way. Now, let's look at these good numbers. Last week, PMI numbers came out. We are still in expansion mode, clocking in at 51.5, but it was slower than our November numbers. Now, inflation also came out last Friday, slowing down to 3.9%, below projections of 4%. Now, this brings our full year inflation to 6%, but it's still well above central bank's 2 to 4% target for 2023. Now, so I guess interest rates, for at least for the Philippines, are not going to go down just yet. Now, we also have to take note, looking at 2024, we have some inflation headwinds. Prices of rice and other food commodities has had a significant bump in December. Now, the effects could show on later inflation reads. So, again, it's not really time to celebrate. Now, To add to that, we mentioned geopolitical factors that may affect inflation. Now, shipping costs have started to go up. While oil prices were offset by rising oil supply, shipping costs has almost doubled due to the disruptions in the Red Sea. See here, we have the Suez Canal, right? And this is a very vital shipping route. This connects trade between the east, and the west, right? So basically, this is a shortcut that avoids ships going around the Cape of Good Hope here at South Africa. See the volume of ships that ply this route, and how the Houthi attacks have cut off this pathway, forcing ships on a 1 to 2 weeks delay just to go around the Cape of Good Hope. Hopefully this situation can be resolved soon. Now let's look at the PSEi charts. The markets had a great start for 2024 as we saw the index break out of this resistance here to settle at 6,629. Now at this point, it looks like a clear path to 6,700 and possibly even to 6,800 here. Now, if we do hit 6,800, we would be hitting this very long downtrend line that stretches all the way back to 2018. So is 2024 the year when we finally break through this very strong resistance line? I would love to see the index retest 6,530 support, because a retrace here could bring in the necessary buyers to help us finally break through of this downtrend line. Now, let's look at some notable stocks here. Aboitiz Power has reached our target price, right? So remember, when AP was taken out of the index, we had a big drawdown here, which we saw as an opportunity to come in. Now, at this level, we probably have around 20% gain. We could partially take profits, or we could wait for this to break out. Now, with the strong momentum going up, we could actually see AP going up, and our next target price would be at around 40 or even 42. Now, let's see how it reacts to 38.50 in the coming week. JFC also, remember, we have been looking at JFC using our buy low, sell high strategy, right? So we've been doing this for 2 years. The last time we did it, November, October. Now we are back at our sell high level. So should we sell? Should we take partial profits? Maybe this time around, you hit this level this many times, you're probably gonna break through one of these days. Now, is this going to be the time that JFC breaks through 260 and finally hits 272? Now, again, let's see how it reacts. You can take partial profits if you want, but we'll see, right? Now, if you missed out on Ayala Land and the SMPH rally, a good third alternative would be RLC, right? I would love to see RLC retrace to 1530 so that we could buy back, and hopefully, again, this could bring buyers in to bring strength to price action and hopefully hit 18 pesos, no? At this point, let's enjoy the rally while it lasts. Take some partial profits when you see some of your stocks hitting some critical levels. See how it reacts at those levels. Now, let's wait for the right opportunity to buy back and be patient now. So let's go to the global markets. The theme for the US markets coming into 2024 was really the disconnect between the bond market and the Fed. This was settled in a way when the Fed minutes reiterated that while yes, there will be 3/4 percentage point rate cuts by 2024, it will not be happening yet, and it will probably happen by the end of the year. So to help their argument was the unexpectedly strong jobs data that came out last week. The jobs market again showed resilience as it surprised to the upside. ADP opening 164 versus 115. Non-farm payrolls 216 versus 170. Unemployment rate even at 3.7 versus the forecast of 3.9. So this sent the probabilities tumbling down to 62% rate cut from 73% for the March Fed meeting, and way down to 49.4% from a high of 71.9% just 1 week ago for the May Fed meeting. So what a turnaround. Looking at the 10-year bonds, look at that rebound from the 3.8 level back to the 4% level. Now this is a hotly contested zone, and the bulls got what they needed to support this level. Now let's look at the S&P 500 charts. The S&P 500 posted its worst start of the year since 2016, down almost 2% to end the week at 4,704, finally snapping a 9-week winning streak. The market overly priced in up to 6 rate cuts for this year, and quickly fell after waking up to the not so new reality of rates being higher for longer after the Fed meeting last week. But the S&P 500 finally ended a 5-day losing streak with a neutral day last Friday after digesting a slew of strong economic data. This indecision candle here could signal a reversal this week, but most likely the markets could go sideways for the most part of the week while we wait for inflation numbers to come in on Thursday and the PPI numbers on Friday. Now, the 4,600 level here actually looks very interesting, and I wouldn't be surprised to see the S&P 500 tap this level either this week or next week. Let's look at what's in store for the S&P 500 in 2024. Now, this year will be all about the rate cuts. Now, if we look at the central bank actions during 2023, we've seen some aggressive rate hikes last year, and with most central banks either at peak rates or have started to cut rates. The debate continues on how fast the US is going to cut rates this year. Now, looking at the Fed calls for 2024, the estimates, look at the estimates, they are all over the place. No? Some think that the Fed is going to cut as early as March, some think it's going to be May, most think it's going to be June. And sometimes you wonder how they come up with these numbers. See here, Deutsche Bank, they'll cut by June, but they'll cut by what? 175 basis points versus the 3/4 basis points estimate of the Fed. I mean, look at Wells Fargo, June, 225 basis points. Now, what information do these analysts have to think that the US economy is going to be in such a bad state by the second half of 2024 that the Fed is going to start stimulating the economy by cutting rates aggressively by the second half? I don't know, right? So now we've shown this chart before, is that the Fed is really being cautious because they don't want to cut rates too early. Why? Because we want to avoid the risk of inflation roaring back to even higher levels as it did during the 1970s. Now remember that the Fed, during that time, the Fed was under a great deal of pressure from the Nixon administration to cut rates to stimulate the economy. Why? Because it was an election year, right? So are we coming into 2024 with the same scenario? And why do we say that? Because, guess what? 2024 is an election year in the US. Now, looking at the historical performance of the S&P 500 since the 1950s, especially an election year following a year with more than 10% gain from the previous year, tends to really outperform. Now remember, in 2023, our gain is what? 24%. So we are looking at this historical pattern. Now, could we be seeing another aggressive run for 2024? But then we have to take note here that before that happens, we might see some fear in the markets by around March or April, right? This could actually be a good opportunity to enter the S&P 500. Now, remember, these are all historical trend charts, right? So we still have to look at price action. We still have to look at economic data that's going to be announced and make decisions along the way. Now, remember, if we go back to the S&P 500, remember, just as early as October of last year, the market entered correction mode, and then suddenly we got a slew of economic data pointing to a Goldilocks scenario, and this started a very strong rally. So this is how sensitive the markets is going to be with economic data moving forward, and with the assumption that the S&P 500 is going to rally by this much next year. Are we saying that company earnings, will be robust, that this rally is justifiable with the forward PE ratios that US companies will potentially be having? We'll see, right? But remember, last year we were looking at a recessionary scenario, and the trend says we were going up, and we did go up, right? So let's see. Now, next week, PH unemployment rate will be coming in on Monday, with the balance of trade numbers on Tuesday. But for the US, two very critical inflation data points will determine if the Fed's higher for longer narrative is justified, and could put more downward pressure on the markets if the results, come in hotter than expected. So we'll see, right? So that's it for this weekend. Please like this video if you found the information useful. Please subscribe to the channel for more updates, and as usual, good luck on your trades. May we have a great 2024. Please, again, manage your risk accordingly, and I'll see you again next week.